Happy Wednesday, folks. Anthony Speciale here with Speciale Analysis, unedited on the edge of the market. Hope you're having a wonderful week so far. Today we are going to talk about the almighty trend. Why are we going to talk about the trend? Because there is no successful trade plan out there that exists without first identifying the trend. Whether you are betting with the trend or against the trend, you need to understand the trend. This may sound corny, but the old saying, trend is your friend, and it is very, very, very true. We want to, in fact, trade with or against the trend, but we need to identify it first. And trends develop on different time frames. There's monthly time frame trends, there's weekly time frame trends, there's daily time frame trends. Wow, that was difficult to say. And then you could dial that down into, 6 hour, 2 hour, 4 hour, 1 hour trends. I mean, it all depends on the style of your trading. Me, I'm a swing trader. I first need to identify the monthly trend, then the weekly, then the daily. My greatest concern always lies within the weekly because those are the structures that, to me, for my strategy, mean the most. To you, it may be different. You may need the daily structure. You may need the monthly. You may need whatever. But you can simply dial out into whatever time frame makes you happy, makes you comfortable, and fits your style of trading, and then you can execute your trades based on that. And I'm going to show you an example of that. We're going to look at a super simple, if you would, example of just how that transpires. So I'm going to open up the chart, and let's dive right in. So what you see in front of you is a chart of Home Depot, ticker HD. Now listen, I imagine if, anywhere in the United States, even globally, if you've ever, repaired your home or made some type of improvement or whatever, you've been to a Home Depot. I don't know that I know anyone who hasn't been to a Home Depot. So this is a widely recognized retail company, and I thought this was a prime example. So what we are looking at here is a weekly chart of Home Depot. And this dials back all the way to a monthly time frame. So I'm gonna move it to a monthly, then I'll move it to a weekly, and we'll get a closer look here. So let's just look at the big picture. Big picture. The chart starts in the bottom left and goes towards the top right. So what does that tell us? The overall big picture trend of Home Depot is up, right? Bottom left, top right. We are going up in the overall picture. So what do I need to do in order to really dial this in a little bit? I need to understand where the price action is, what it's doing, where it's being reactive to, and how I can take advantage of it. So I start with a simple trend line. Again, we are defining the trend. So I drew my line starting here, connected a bottom here, connected another bottom here, continued on. So once we draw the line, all we have to do then is what we call clone it. So I click on that line and I click clone, and guess what? Magically I have another line in the exact same angle, the exact same pitch. So what did I do? I moved it to the top here, and you can see that I have now created a channel. So here's the top of my channel, here's the bottom of my channel. All this is a channel extension, meaning the same width of the primary channel, we have extended it. So that's considered, again, a channel extension. So this is again, monthly time frame. I'm going to dial it into a weekly so we kind of get a different look at it. And here we are. So what does this tell me? I can execute now on this time frame. I can very quickly, very efficiently come in and say, hey, I know, I can see where the buying opportunity is, where to place my stop, and where to set my target. Many of you may not, because you're not familiar with this, technical setup of longhand analysis. But for me, it's very, very obvious. And it goes a little something like this. Let me get a little. So this right here is my opportunity to buy this market. What do I always look for? 1+% confirmation. Let's see. We measure from there. We got 1.74%. This is my confirmation. This is my opportunity to buy the market. My objective now is to complete the channel extension, meaning trade across this extension. So how do I do this? So here's my buy. This is where I want to go long. Where do I want to set my stop? I need to decide where am I going to set my acceptable stop loss that if this trade does not work, that I'm satisfied with exiting the trade and never looking back at it. For me, I like to go to the most recent pivot prior to the entry. And it just gives it a little bit of room to breathe. But, we ideally want to keep that less than 10%. So for me, I like this right here as my pivot. So there is my stop. So here's my entry. Here's my stop. Let's see what we have on a percentage basis. So we are risking approximately 9.86%, a little less than 10%. That is my comfort zone, less than 10%. And what are we potentially making? So from here to here, we got about 23% almost, 22.92%. Now, knowing that we're going to give it a 1% buffer because we don't want to, we want to make sure that we get filled. So still, 20%. We are a reward of 2x our risk. To me, that, again, makes sense. So, with that in mind, I'm long here. My stop runs here. And I buy the market. Market goes up and goes into this long-term consolidation period. Now, market breaks below and then shoots back up. This is what's called a false breakout. You can handle this two ways. You can suck it up and just hold through it because you're in this trade long. The overall trend of the market also remains long. So we want to kind of stay with the trend. The trend is our friend. Or if this transpires, you may want to say, hey, listen, I want to get out basically at break even. That's your thought process. That's completely up to you. But in the end, had you held this, still again only risking 10%, you would have had the opportunity when you finally tested this channel extension to book yourself probably about 27 to 28% return. And this all transpired in about 294 days. So less than a year, about 42 weeks. So about about 10 months this transpired in. So you can do this very simply by just simply identifying the trend is long. I want to buy the market when the opportunity is offered. You could have bought the market here too and then just rode this straight up. Had you missed this, you could have bought it on this breakout because, again, you had another setup here. Here's your 1+%. Could have bought the market at the open here and just rode this and avoided all this had you not been in it. But if you had bought Home Depot back, on the recovery of the COVID-19 sell-off, because that's what this is, and just stayed with the trend, you very easily had the opportunity to capture nearly 30% return on just the stock itself. Listen, had you bought an out-of-the-money call option, with a year plus expiration or a year expiration on it, you very well could have made a several 100% return on your investment by just simply following the trend. Guys, it's so important. And I know, again, it sounds cliche, it sounds corny. The trend is your friend. Now, again, big picture uptrend, but on a weekly basis, you could see here we are in a downtrend. Price is traveling down. If we move this to a daily chart, you can see it's much more exaggerated that the price action is clearly breaking down. So downward trends may exist inside of larger uptrends. And vice versa, you could have a large downtrend with an inverse uptrend. The next ticker I'm going to show you, we're going to look at that as well. And this is Cheesecake Factory, another retail business, one that you all may be somewhat familiar with. You may have eaten there before. You may have had lunch or some dessert or dinner. They have a huge menu. Food's great. If you haven't been to one, you should try it. Personal favorite of mine and my wife. It's I don't want to call it a cheap night out, but it's for the money, it is a great meal. So with that said, you can see in this picture here several different trends. Now this is a weekly chart, and you can see we have an uptrend, followed by a downtrend, followed by another uptrend, followed by a tightening uptrend, almost vertical here, then followed by a downtrend. So you can see the market goes up, then the market goes down, then the market goes up, and then the market goes down. Again, if we just draw simple trend lines, we can quickly and efficiently understand what direction the market's going in. Let me tell you something. When the market goes in a direction, the likeliness is it continues in that direction, and then eventually it turns. Once we can identify the turn, we know now trade in the opposite direction. Listen, could you unfortunately every once in a great while pick the wrong direction? In the sense of, hey, you bought at the top or sold at the bottom? You could, but if you wait for breakouts, you're not going to be on the wrong side of it. Watch. I'm going to clone this. I'm going to simply move it here. And what did I just create? I just created a channel structure. Boom. Here's where I break it. It goes lower. Boom. Here's where it comes out. It goes higher. It's not that hard. This was built right here. This is where it broke. Guess what the market did? The market went higher. Listen, we want to trade with the trend. Because if we trade with the trend, let's just say we buy this breakout and we are in an up channel, our target continues to get, meaning our reward, get bigger and bigger and bigger and bigger and bigger as the trade transpires. If we trade against the trend, we will find that our target gets smaller and smaller and smaller and smaller. So it makes it a little more difficult for us to be wildly successful. So if we stick with the trend and we trade the breakouts in the direction of the trend, it's going to serve us well. If the market is going sideways, if it's range bound, it's going to be wildly difficult for you to be successful. Find something else to trade. There's 7,000 different assets out there for you to trade. Whether it's an equity, a future, a commodity, a cryptocurrency, whatever. Pick your pleasure, pick your poison. It's completely up to you. But again, the idea is when the market is going up, we want to trade long breakouts. When the market's going down, we want to trade short breakouts. It's really that simple. Again, the trend is our friend. We want to stay with the trend. Listen, is there always going to be an opportunity presented? Nope. But that is what it is. That is what it is. But your highest probability trades are going to be trend favoring. And again, your reward grows as the trade transpires. And that is only better for you as the trader. So it was kind of a lesson for today. Just so you guys know, I will be traveling this week to our corporate office, Traders Agency office in Orlando to shoot a promo with Josh Martinez. So I will be out of the office for a couple days, but I will be reachable. If you need anything at all, you just send me an email at info@specialanalysis.com. And I will get back to you as long as I am not in the studio. But outside of that, guys, I will have videos prepared for you, some lessons lined up for this week. Market has thus far been a little interesting. Still, we are now at a period that we are waiting to see what happens next. You can circle back to look at all my analysis for this week that I've put together for you at my TradingView account. Simply follow me, Special Analysis, on TradingView.com. And you can have access to all of my ideas, trade ideas, and my analysis for this week, and you can look back at prior weeks. So with that, guys, if you're enjoying these videos, if you're finding them valuable, if you've learned something today, please, below, like, share, subscribe. I would greatly appreciate it. My goal is to do this for free, to share this with as many of you as humanly possible. So I wish you a beautiful and blessed day, and I look forward to speaking with you tomorrow.